I haven't seen a gap down this big in Apple stock in a very long time. Look at this huge earnings gap. In today's video, I want to cover Apple earnings, the gap, the technical levels to watch going forward. Plus, I've got some other stocks I want to review as well. So let's go ahead and jump in. The expected range over earnings was only a $13 move. And since the stock closed here at 333, which was very interesting, by the way, because if you had a look, Google also closed at 333, and I can't remember the last time ever that Apple and Google closed at that number. It's very, very interesting. Of course, Google went up, Apple went down from there. The expected range was only down to 320. Apple opened at 304 and change. So it was a huge gap to the downside. One, I think the market was really not expecting, considering, again, that it was only pricing in a $13 move. So what could have happened here? There's two things really at play. The first one is pure technical. So when I back up this chart to a weekly and I look at the long-term trend here, check this out. Here's the long-term channel for Apple. It's been trading this for the last 6 years. We've got our resistance right across here. And as you can see, we blew up right over the top, and this move to the downside has just sucked us right back into the channel. Now, here's the bottom of the channel. We're going to kind of come back to this later, right across there. Okay. Now, the second thing was Apple earnings was a services revenue miss. Now, Apple makes, of course, most of its money from its iPhone, but they've been plateaued there since 2015, right around $200 billion a year. So about $50 billion a quarter, which of course is absolutely tremendous, but it's stuck. The biggest growth has come from services, which has essentially come from basically a nothing business, all the way to $30 billion a quarter. Now think about that for a moment. Apple's iPhone revenue stuck at $50 billion. Services coming up. Now $30 billion. It's now a pretty good chunk of Apple's revenue, but it's not growing as fast as it was. It's slowing down. And I don't think the market really liked that. So Apple got sucked back into its long-term channel, had a miss on services revenue. Here's what I'm looking at going forward. Couple of levels to watch. First, we stumped down on Friday at $300 to the penny. Not a penny above or below, exactly $300. That was really interesting. In fact, again, a couple of odd numbers here coming out for Apple. Closing at 333, hitting $300 to the penny. Now, if 300 can hold, there's a very strong likelihood that Apple can build a base here and potentially have a gap fill, right? So I want to kind of look at a couple different scenarios. The first one, again, base, we move above 310, we start to fill the gap. Coming on Monday, if we go sideways, watch for compression. We got a 10-point channel. But if $300 breaks, the MACD is already bearish. We'll come back to that in a second. The next support is all the way down to 275. And the bottom of the channel, if we again back this all the way up with the weekly, is not until $250. Now, during our live stream for the Apple earnings update, where we streamed the earnings call live for the technicals here with our group, we polled the group and said, where is the strong support? Where would you buy Apple? And the majority of the group said between $275 and $250, which basically puts us pretty close to the bottom of the channel right across there. Could actually come a little bit lower, but I would be really surprised to see it come much lower than that. Now, because the MACD is bearish, there's a couple things that we need to understand just from a probability standpoint. Here's what I mean by MACD being bearish. The lines are crossed. It's so simple. But again, from a probability perspective, we know from all the trading we've done and our back testing here in our strategy builder that when the MACD looks like this, right, basically like that, the payday cycles, which are these momentum cycles to the upside, they're shorter, and the bearish ones are longer. Now that might be obvious, but those are facts, right? Those are facts from a probability perspective. So again, this doesn't look good, and it might take a little while to unwind out of this. So again, I'm watching $300. We could build a base here, but if it cracks, we have a lot of things setting up for potentially more compression or more downside in the stock. Now, I've got a few other stocks I'm going to review here in a second, but I'm curious to hear from the group Where do you think Apple bottoms? Go ahead and post a comment below, and I would love to hear your thoughts. Now, a couple other things I want to look at. Next is the Qs. The Qs continue to have a strong bounce. We've now moved above this shelf at 685. This is what we call a liquidity sweep, which means we break support briefly and then just whip right back up above it. Okay, so as long as the Qs can hold 685, we are off to the races for potentially another bounce. If at any point we get back below and stay below 685, watch for more selling. Now, I think it's really important when you're trading to establish these levels of risk. I call them lines in the sand or my over-under areas, and that's essentially what the 685 level does for us. Now, the other thing I want to cover quickly is NVDA. NVDA had a wonderful bounce here right off support that you can see here. 190 is proving to be a fantastic support, and it's very often the stock actually does a run into earnings. So if we can hold 190, watch for a bounce into earnings that are coming up here in a couple of weeks. We have potentially a new payday cycle that is just getting started. But gosh, this stock has been very choppy, very sideways here, but I do like it above $190. Couple other quick ones I want to cover for you. Tesla, huge move to the downside. Similar to Apple, it bounced right off the $300 level. We got a small bounce here. If Tesla can hold $300, watch for a bounce. SPCX is continuing to sell. It's not time to buy this one yet. We broke the lows from Thursday. We're still moving down almost to new all-time lows. We're not bottoming yet, so still a little bit of caution there. Great day trading stock. I've got a post about that you can check out as well in my feed. Last one here that a lot of people are asking about is PLTR. Completely sideways. We're still seeing this downward pressure. We've got earnings coming right up. I like 125 as an over-under. I'm very bullish above 125, but neutral to bearish below it. I think there's a very good likelihood we see a huge rounded bottom here, but we're going to have to see what happens with earnings. Now, I've got two more surprise stocks I wanted to highlight today. I'm not done. The other one is actually something I wanted to recapture from last week. I had shared with everybody this one. This is CRM, Salesforce. It's been really sold off all the way from 365 to 150, over 50%, but it's starting to gain a little bit of traction down here, right? And I think it's a very strong candidate for a bullish move if it can hold 175. We've got a couple of little doji candles here. We've got a lot going for this technically for a rounded bottom. But if it cracks 175, all bets are off. We're still compressing, but holding 175, folks, I think we have a lot of upside here. Now, we put together this really cool tool from a fundamental perspective that is something that shows us this. Check this out right here. Price to value gap. Look how far below value we're trading here for CRM. Additionally, when we look at the earnings, check this out. Look at CRM's earnings. They just keep going up and to the right. This does not look like a company that's going to go out of business or being taken over by AI. It actually looks like a company that's accelerating probably due to AI. So I'm stocking this one for a strong bounce, but we need to start seeing more money flowing into these software companies. The other one, as you know, was Now. I know we're covering a lot today. This will be the last one here. Now is starting to round a little bit down here, starting to bottom. I really like it as a strong move for a new cycle if it can get above and stay above $113. This is also a company that has had strong earnings. And again, when we look at its valuation, it's trading at a massive discount. Look at the price to value gap. 45% discount. Huge here. Absolutely huge. So I hope you enjoyed this quick video. If you liked it, make sure to subscribe to our channel or follow along. This is Michael Lamar, and I look forward to seeing you in the next one.